Hi there, good morning. My name is Victor Lee, and I'm the head of investment strategy at Sankore Global Investments. This is your weekly financial market roundup. We start off in the US market where, the performance really continues to be largely influenced by tech stocks, particularly Nvidia. The broader market on Friday ticked lower. The S&P was down 0.16%. The Nasdaq lost 0.18%, while the Dow Jones edged higher by about 4 basis points. Nvidia declined 3.2% on Thursday and even dipped further on Friday. Nevertheless, the chipmaker is up about 155% year to date. For the week, the S&P notched a gain of 0.6%. The Nasdaq finished the week flat, while the Dow rose 1.45%, its best weekly performance since May. Concerns are beginning to emerge around the possibilities of an overextended market. We saw the S&P hit a record high on Tuesday last week, again on the back of the very strong moves that we had seen in Nvidia last week, which sort of cooled off, towards the end of the week. So concerns are beginning to emerge about the possibilities of, the market being somewhat overextended, and that we are likely to see, some pullback soon. Also, evidence is also beginning to show up that the upside momentum, for Nvidia is beginning to show, some signs of a slowdown. Also, you add to the fact that the whole sell in May and go away mantra is, sort of beginning to kind of gain momentum. This whole idea that, the returns during the summer months are typically tepid. If you look at data from 1990 to date, the S&P on average has returned about 2% between the months of May and October. However, if you look at the returns between November and April, it's been a robust 7%. Again, remains to be seen whether we would see that, take roots this year. But nevertheless, it's important to know that there's some sort of caution that's beginning to filter through into market sentiment. For the remainder of the week, really, a combination of consumer and labor data set to be released this week, could prove crucial in determining market direction. So we expect, consumer sentiment data to be released on Tuesday, where we would see, jobless claims, the weekly jobless claims data come through on Thursday. We should also see, Q1 final GDP prints as well. That will give us a sense, really, of the true states, of the economy. Over in the UK, inflation fell to the Bank of England target of 2%. The data that was released last week. This is a drop from 2.3% that we saw in April, and this was also in line with expectations. Falling food prices were essentially the largest contributor, if you will, or the main culprits in this decline that we have seen. The inflation in the UK has basically declined, quite significantly, really, since it peaked at about 11.1% in October of 2022. Over the last 1 year, it has averaged about 4.9%. However, if you look at the average between 2022 of May and 2023 of May, that was about 9.9%. So clearly, we've seen a very, very significant drop, in inflation. However, in spite of this, sharp drop in inflation, the BOE held rates steady at its meeting last week, which was pretty much in line with expectations, really. However, the market is beginning to price in a cut at the BOE's meeting in August, particularly on the back of the, strong declines that we have seen in the inflation situation in the UK. Over in Nigeria, it was a holiday shortened week for the Eid celebrations. The fixed income market again started out with liquidity really being the determining factor, really. So the treasury bills market, for instance, started out bearish with some cherry picking, particularly on the June 12, 2025 paper. We however saw some coupons that came through last week, and this created some demand, particularly at the short to the mid end of the bond market. An home auction, we had two home auctions last week. The one that was floated on Friday, there was no sale. Not clear why that happened, but again, there was no sale. On average, the T-bills market yields declined by about 21 basis points. Like I highlighted earlier, activity in the bond market was really skewed towards the mid and the short end of the curve. as participants basically looked to deploy coupons that had been received. On average, yield declined by about 6 basis points. We also saw inflation come out during just before the Eid break, that weekend before the Eid break, came in at almost 34%, continues to rise. However, the clip at which inflation is rising is obviously starting to slow. And then for this week, we have a bond auction today. The DMO is offering about 450 billion across various maturities. Again, remains to be seen where these close. Those stock rates would really prove to be very crucial in determining market direction going forward. So that's pretty much it in terms of our market update and what our expectations are going into this week. We hope that you have a very, very productive week. Thank you very much.